Stock market analysis and projections on the S&P 500. Here's a little of important information for you. Read this slide first before you proceed. This tells you about our approach to the markets and how it's important for you to take ownership of your own trades as you use our analysis or ideas you get from anybody. The 5 essential building blocks to successful trading. A special price on this amazing workshop. Is this what trading feels like to you? Do you feel off balance, always trying to find that elusive, perfect mix of charts, indicators, and other trading tools? And of course, the parts of you that may be fighting all that internally, this is the workshop for you. Information write to Matt at askSlim.com or go to the top of the website. What you're going to see in there is a kind of a broader look at what I'm showing you right now. This fantastic workshop I produced, 6 videos. It's not your everyday how-to trader workshop. It's not that guaranteed winning system. It's about you. It's about all the parts of you and all the parts of trading all brought to you, I think, in a great way. And it takes you through a lot of my history, tells you a lot of my story, and how I give you some processes that really help you to be a better trader. Of course, a better person. Building block 1 is about defining a healthy role for trading in your life. So often we give trading the wrong role, and that gives us problems. It helps you build emotional fitness and control your reactions, which I think is so important to success. It tells you about matching your style with a method and personality, all of those things put together so you don't end up looking like this when you're trying to trade. And adopting 6 areas of discipline. Discipline may be the most misunderstood and overused word because it's not just about taking losses. There are so many more aspects of discipline about getting you prepared to be a trader and to design your own unique plan and winning formula. We look at that in building block number 5. This is an amazing workshop. I spent a long time looking at this, and there's a lot of reveal about my history in there, and you're going to find it fantastic. This 6-video online workshop guides you through a process of self-discovery, my process of self-discovery, and the one that you can use to improve your trading. It's an opportunity to identify what holds you back from achieving your greatest success and craft your own unique formula, your winning formula. Sign up for this powerful workshop at a great reduced price. Not only is it about trading psychology, but about so many of those other things that are important to you, about putting it all together. Really 2 special prices here and a great offer. For non-members or free members, you get $100 off. That's only $197. And we're going to include with that a free month of level 3, which is $119 value. So if you want a great exposure to what we do in, as far as our analysis and what we offer with our applications, not only will you get the workshop for $197, but you'll get a month of level 3. For our premium levels, members, levels 1 to 4, you're going to get 50% off. That's only $148.50. Now, the level 3 and 4, you already see lots of those great things. But if you're a level 1 or 2 member, we're going to boost you up to level 3 for a month. So you're going to get a free month of level 3. So premium members 1 to 4, 50% off. You're going to only pay $148.50. And you're going to, if you're a level 1 and 2, we're going to move you up to level 3 for a month. This is an unreal deal, and you're going to be blown away by the quality of this workshop. Absolutely fantastic. If you're watching this right now and you have never been an askSlim member, this is such a great way, if you're interested in the markets, to really improve your success. All right, stock market, S&P 500. We're going to look at the SPY cycle analysis and projections. We're going to use our level 4 indicators looking at SPY. Now, I've talked about the fact that I thought that from somewhere in September through November, the window would open for a sizable correction in the stock market. Now, we've gotten through September without anything happening in that window, and now early October, we've seen a sideways chop going on for a couple of weeks in the stock market. And now we're going to take a look at why this very unique style of analysis that we have is saying that there's reason for concern and there are risks ahead, which could start any time, though I think it's really going to be in a couple of weeks that the risk really picks up, and that there could be a sizable downside move ahead in the market. Geopolitical issues aside, whatever that is, we're looking mostly at the technical aspects of the market, but it's pretty hard to ignore what's going on in the world right now. Let's take a look first as we look at SPY. So this is a multiple time frame grid. We're looking at weekly, daily. We have daily momentum separated out for you to see clearly, and then we have 2-hour charts here. I'm going to go from left to right, and I will blow this chart up on the weekly and show you the analysis. Now, many of you are very familiar with our analysis because we have really many thousands of people that look at our analysis every single week. And for those of you that are brand new, what we have here on the bottom are cycle brackets. I get a lot of people that write to me and they say, what's that indicator on the bottom? Well, this is not an indicator. This is a drawing tool. And we just simply use this to help find us the average cyclical period. And if you want to learn more about our analysis, go up to the workshop tab and take a look at the information on the cycle analysis workshop. And you're going to see there tons of information, and you'll learn a lot by watching the free video in there. So what we're looking at here, again, the bottom is the cycle brackets. I'll show you that right over here. So, it's like if I go to this exact low and I go to this exact low, it opens them up and you can see, and we kind of look for where they align the best in order to get the sense for the money flows, how money is moving in and out of the market. And when you see a market that is moving as this one is, and you see these cycles making higher peaks and higher bottoms, you can see the uptrend in there as it essentially has existed in this bull market back from that low way back over here in 2022. So you have that uptrend in there, and if you look at each of these cycles in here, you can see a positive cycle. In other words, it finished well above where it started. And that's a positive configuration and positive translation. In other words, the peak translated way on the right side of this big cycle. The same thing happened over here, positive translation, and even more positive configuration because it was a very strong upward move. Each of these yellow areas, are the corrective periods. In other words, when money flows out and when there's this big upward force going on. And you can see it here in our reversal scout right there, where it turns up, it pretty much confirms the cycle trough right in there, and it stayed positive through here. It turns up right in here, it confirms this trough, and now it has been in a wiggle here. This wiggle, this downside move, was that yen panic right there, but then it moved right back up and turned positive again. And we still have positive momentum here on the weekly chart, looking at this reversal scout. This is a level 4 proprietary indicator, by the way. So we have conditions that are positive. However, you can see that we're coming to this period where the corrections are normal. Pullbacks are normal. This one right here, after a very bullish cycle, fell about 6%. This fell about 11% right over there, and that gives you an idea of the potential for downside moves that exist right in this yellow area right there. Supports, well, the highest support level we see is about 543. That's not very far down. That would be about a 5% move, much more likely to get you to the monthly support here at 525, with a pretty good potential of getting 509 or lower in this period here, which takes you out to mid-November. Mid to late November actually is a possibility. Remember, the election is November 5th, and I have a feeling that that election is going to bring fireworks. Anyway, here we are, these last couple of weeks, really, going nowhere. These are called spinning tops in the candlestick theory world, which essentially tells you that there's pressure on both sides, buying and selling. Like in the beginning of the show, I talked about, I think there's a cap in the market based on valuations at 200% of GDP, and that may be why the market is stalling. So again, what we're looking for is a decline. Most likely, I think the highest probability is to about 525. That's 43 points in the SPY. And that still is not a very big percentage loss. It's somewhere between the 6 and 11% decline that's in there. It could be worse and it could be better, but that declining phase is likely to show up. Let's take a look at the daily. Now remember, if we're looking for a decline in here, we would be projecting on the daily for a similar declining period. In other words, the drop in here to somewhere around mid to late November. So here, when we look at the daily cycles, you can see each of these vertical timing lines there show you where the actual trough was in the cycle, and you can see the beauty in understanding these rhythms. Positive cycle here said you'd go to a new high. We got the reversal scout and the slim ribbon turning positive, and on the bottom, the option bias study. Now what this tells you is how to bias your option positions, giving you the highest probability that you will be in the right direction. When it is here at the P3 level, right there, that's a solid 3, that's when it's the highest probability that there's an alignment of all time frames, giving you strength in the market. You can see we're still under those conditions right now. Here we see the last 2 weeks it's been moving in a range. I'll just tighten this up a little bit for you to see right here. And with the momentum still strong in here, well, we would expect with only about a week or so to go in this cycle, maybe it's 3 to 6 days, that a decline would come, but again, it would hit supports and then begin to move up again. Now you can see in here the projection is that it won't, once the low is made, once we get a correction, that the rally will not get to a new high. It's kind of a bold call for me. It's because of me believing in this weekly correction that is very due. There's also a coinciding monthly correction that's due. So under those conditions, I would expect that it would be a decline in here that would come from this period, mid to late October into this period right over here, which is mid-November. So this is the riskiest period out over here. That, on the beginning of the week, at the beginning of the show, I talked about continued choppy conditions. This is why I think they come down in here and then come back up. This rally, of course, could get up here and test these levels here rather than stopping over here, making some kind of a double top. I wouldn't have an argument with that. I think that could happen. But we're looking for further decline right over here, an attempted rally here into the mid-October area time frame, and then this bigger downside move. And I'm going to show you other reasons that I believe that that's coming. In the meantime, momentum positive in here. I'm going to move over to the daily chart, momentum chart, and you can see it's still positive. This is an area chart on the slim ribbon. Slim ribbon is a free indicator. And it's available on several different platforms, and if you need information on that, you can write to team@askSlim.com. This I'm showing, of course, on the Thinkorswim platform, which is the platform that we primarily use. Now, on the bottom is the slim ribbon PO, and what that tells you is when the momentum conditions are positive and ready to resume. When it's green, it's positive. These arrows say momentum is resuming on the upside. You can see the value of that as all of these were positive. When this one went negative here, this arrow told you about this decline. That was perfect. And now you can see positive readings in here and right in here. And that still tells you that there is strength in the market. So that's agreeing with what I'm saying about the market coming down, coming back up. And until this turns red, we would not have a reason to believe that there is a sizable decline going on in the SPY. So I'm showing you things that are anticipating weakness, but in the meantime, showing strength. We've had that condition for quite a while, as we have talked about the potential for a correction, but always being agnostic and following what our algorithms tell us are the most important things about market condition. Here is the 2 hour. Now, this is the SPY. Now, you can see in here that when the 2 hour alignment is as it was right in here, where it was positive from here all the way through here, that's for if you're a trader that trades intraday or very, very short term, near term as we call it, that's when you want to bias your positions also to the long side, or have your biggest trades to the long side. Once it turns red, you start to get some warnings that things are changing in here, and you can see that. This is the slim ribbon PO on the 2 hour, and you could see phenomenally good messages there, and now turning red. On the bottom here is the market condition indicator. This has got the longest components built into it. And you can see it gets up here near 100, and it's trading right now in the 70s. These are bullish readings still. So you have a very bullish condition still existing with a little idea that there is some weakening going on in the market, and that very much aligns with, on the daily chart, what I'm looking for as this corrective period right in here over this next week or so before we then get, I think, is the final bounce. Now, what I want to do is I want to bring in some other charts that I think are important to this analysis. This, of course, is the SPY looking at all of those charts. Now, let's look at the VIX. I'm going to bring the VIX in here for you to see. And if I'm talking about the stock market going into a corrective period, I would be looking for the VIX to make a bottom. We have been talking about this bottom forming in here around mid-October for weeks and weeks and weeks, and that the potential was that, you know, VIX might chop around in here, and you could see it's doing it here on the daily. You know, I said maybe rally into mid-October. Well, that's right over here. This is about the third week of October where this trough then does set. There's a potential that this low is already in place and will get tested on the weekly. But basically, the VIX is telling you that market participants are beginning to look for insurance in the market. I don't blame them. At 200% of GDP, Middle East tensions going on, there is just so much that can cause the stock market to move down. And again, I think that upside is extremely limited compared to the downside that is available in the market. This is the VIX bottoming in a bottoming process here. I could easily see into November the VIX getting up into the high 30s to all the way up into the 50s during that period between, let's say, week 2 of October and week 2 of November. So that 3 to 4 week window in there is where I think there could be a huge spike in implied volatilities, just as we're showing right over here. There's an out of phase cycle right over here that might have bottomed already. And if that's the case, it may prevent VIX from getting down very far over here. But this is a picture of the cycle analysis in the VIX, which has just been absolutely phenomenal in helping us as a guide for analysis in the market. Indications in the VIX that within about a week, week and a half time, then there's a high probability of a big spike in implied volatilities, and that being a time when the stock market is likely moving down. So let's move in the HYG. This, I think, is an important chart in comparison to look at right now. So this is your high yield bonds. This is the stock market I'm making a stock market comparison. So I've got that line in there, which is the stock market, the S&P 500. And you can see that there is a strong correlation in the cyclical patterns in here in the stock market and in the high yields. Now, the high yields are, giving you a very bullish look right in here, a lot like the stock market, but now look like they're turning down. Where does this low come? Right over here if there's a decline in high yields? down into this mid-November period. So the stock market, which is likely turning down and could give a sizable correction right now, that aligns with the HYG. And you could see the beautiful tracking here when you look at HYG versus this highlighted S&P 500 line that I have right there. So strong correlations between these high yields and the S&P 500, and calling for a move to the downside of some consequence in the next, let's say, 3 to 5 weeks in here. That correlates with what we believe is happening in the S&P 500, and then after that, another rally out over here, which very much correlates with what we see in the stock market. So I'll move that away there. I'm just going to pull up the weekly right over here on the S&P 500, and yes, so if I were to be projecting further out, I would say that after a decline in here, just like in the HYG, there would be another rally out here of some significance out into 2025. So I just want to show you all of those correlations. Now what I want to do is bring in FEZ. And this is the European Euro Stoxx 50. And look at these cycles in here, which so correlate with the S&P 500. And again, this one looks like it made its peak already and is turned down with this downside bar. You can see the megaphone pattern as it's forming in here. It's a common topping pattern, and very often the first move down gets you somewhere into the middle, and that would take you down over here somewhere around 50, or down over here 48.5 in this period, yes, out into mid to late November. So you see all of these correlations that we have going on right now in the S&P 500 with the VIX, the FEZ, HYG, all of them pointing to the potential that the stock market is going to have a pretty sizable corrective period right now as we're looking at this out into November. That is a look at the at all of the indexes. Let's take a quick look at our market condition monitor, and we're looking at the short term right over here in the market condition monitor. This is an application for our level 3 and level 4 members. So on the short term, look at these indexes. They have all turned neutral. Now they were all positive and now turning neutral for the short term. If I look at the near term, which is the intraday trading, would be like those 2-hour charts, you can see in here, again, they're all neutral. So it's not giving you anything. I've almost never shown it this way because the market is just in this sideways chop, those spinning tops on the daily chart, just like I said. But if you look at the intermediate, they're all very bullish. So what that tells you is that this period that we see of correction coming is pretty likely to be temporary. And like I'm only looking for 3 or 4 weeks to the downside, but hard. And then the market moving up again after that. So that gives us that idea. If you want to know on the short term which are the best and the worst of the stocks, we'll look at trade setup conditions, and we'll look at the ones in here that are very bullish right there. And you can see right there, PPLT, KIE, emerging markets. Of course, that's affected by China, Morgan Stanley, PayPal, eBay. Those are all stocks that are very bullish. And we'll keep it going. KLAC, TSM, gold, that's GLD, the semiconductor index, LUV, SLV, silver, of course, CRM, TMUS. These are all on the short term very bullish. So which are the ones that are very bearish? We'll look at the setup condition here, and you can see Federal Express, Boeing, Coin. Look at that. Coin is bearish. But the only two that are very bearish are Boeing and FDX. These are all bearish looking right there, including Costco, which, of course, was a monster stock and now really looks like it's beginning to have trouble. And so are a lot of those stocks in retail. So that's a look at our market condition monitor. It's a fantastic application. And again, you get this with level 3 and level 4. The difference is level 4 gets the intraday information. but level 3 does not. So sign up for level 3 or 4 and you will see this. And if you're brand new and you are going to take the workshop for this special that we're offering in the workshop, you're going to get level 3 for 1 month, and you're going to get that application. So don't forget, sign up for the 5 essential building blocks to successful trading at these amazing reduced prices. Go to the top of the askSlim website, and you'll see right there where it says BB Building Block Special, little square up there, and you'll be able to sign up for that. And if you have any questions, write to Matt at askSlim.